Good morning, Monday, October 27th, 2025. I'm Herb Morgan, Senior Managing Director, Chief Investment Officer at Cantor Fitzgerald Managed ETF Portfolios. This is my weekly economic and market commentary beginning today. You can follow me intra-week on LinkedIn. Just follow me there, Herb Morgan, or on X at Herb W. Morgan. The presentation you are seeing and or hearing in the case of an audio-only podcast listener has been prepared by me. It is designed to be used by you, whether you are an investor or a financial advisor. Doesn't matter. You are expected to make your own investment decision. Nothing contained in the presentation should be treated as investment advice, tax advice. No recommendation for the purchase or sale of any securities. Everything is for informational purposes only. The views expressed herein are mine and mine alone and may differ from the views of CFIA's parent, affiliates, or other portfolio managers of the firm. Well, another week of government shutdown and another great week of equity price returns as we get into earnings season. S&P is now up almost 17% on the year. International markets continue to do well as well. Bond markets also doing well. You can see here, look at high yield. If a recession were imminent, although I told you what I think could cause risk off last week when we talked about this situation in private credit, there is a growing number of retail investors that see this as a low risk investment, and it is definitely not. When you see high yields start to crack, that's when you knew other risk credit markets are cracking, and that could, with contagion, lead to a risk-off scenario. As of right now, though, the bull market is fully intact, and the earnings season continues strongly. Weekly claims for unemployment, again, nothing to report this week because of the government shutdown. The Department of Labor did not put that number out. We got existing home sales for the month of September. You can see over here on the right. Gained 1.5%, are up 4.1% on a year-over-year basis. Existing home sales are pretty darn low. Even though we had the government shutdown, the Bureau of Labor Statistics, which is part of the Department of Labor, was able to put out the CPI number. And it's a very important number. They wanted to see that number improve to try to get the Fed cover to cut interest rates. The September CPI was better than expected, 0.3%. The estimate was 0.4, year-over-year basis up 3. Don't forget the target core is 2. Core is 3, so still well above target and not really a place where they should be cutting interest rates, but they look at the deteriorating jobs market. They see some slowdown there, so they say we're getting ahead of anything that could be recession-related is, I guess, what the justification is they're using. Next, we got the flash PMIs from the S&P Global for both manufacturing and services. Manufacturing, remember, is about 15% of the U.S. economy. The estimate was for 52. We came in at 52.2, so better than expected. Manufacturing is an area that's been important to the administration to try to revitalize. Remember, we normally get the ISM. We'll get the S&P final and then the ISM next week, and they have been differing the last few months, so one cancels the other in a certain regard. Services, however, kind of spiked a little bit, 55.2, well above the 53.5 estimate. You can see that, a pretty high reading when you get to 55. That's almost considered ebullient, if you will. So that was a great number. Again, those are both flash readings. The final readings will be out next week. New home sales in the month of September, not released because of the government shutdown. Consumer sentiment, as released by the University of Michigan. So despite that good services number, good manufacturing number, the consumer is not having it. The consumer is looking at high prices, maybe a little harder to get jobs than before, credit maybe a little more difficult than before, and consumer sentiment fell yet again and remains well below, this is the COVID level. People are feeling worse about their situation than they did in COVID. This is one of the reasons why the Fed can look and say, maybe we should cut interest rates, right? We also had a number of trade-related developments this week. Canada Canada is getting tough with the U.S. Canada announced it is reducing the tariff-free quota for U.S.-made vehicles where GM and Stellantis, they own the Chrysler brand now, when those two companies send cars into Canada, they have a quota that they're allowed to get in duty-free. Canada said, no, we're going to reduce that number by 24% for you, GM, and for Stellantis, we're cutting your number in half. Then the provincial government of Ontario ran a video ad, a commercial, which you probably saw, from a Ronald Reagan 1987 radio address to the nation on free and fair trade. Remember, this was sort of the time of the renaissance of the free traders. They spent 75 million Canadian on this campaign, and they aired it on all over U.S. television, including Trump-friendly networks. Newsmax and Fox took those ads and obviously ran them as well. The Ronald Reagan Presidential Foundation says the words were used without permission and were taken out of context, and the president responded in kind, saying he was ceasing trade negotiations with Canada, and then he did add another 10% to their tariff rate as well. I expect this will all get rolled back relatively quickly. Probably more importantly on the trade front was Treasury Secretary Scott Bessent and Trade Ambassador Jameson Greer met in a sidebar at the Association of Southeast Asian Nations Summit in KL, or Kuala Lumpur. They met with He Lifeng of China, and it looks like China is back on the table. Trump is now publicly expressing optimism about doing a, quote, fantastic deal with Xi Jinping. That boosted risk sentiment and markets late in the week. Moving on, we have this week coming up a Fed meeting. The rate announcement will be on the 29th, and we expect another 25 basis point cut in the Fed funds target rate from 4.25 to 3.75, 4. Now, we do have a lack of data, but most people kind of agree the labor market is just not as robust as it was. And I told you already, we've got the CPI. And then, of course, we have one more meeting before the end of the year. That's the December 10th meeting. There is no November meeting. And on December 10th, the markets are fully pricing in another 25 basis point rate cut. Earnings, they do abide. They are good. 145 out of 500 S&P names have reported. 124 of those, pretty high percentage, have beat the analyst estimates. The average surprise, remember last week I said it was kind of low. It's like, I forget the number, 5-6%. That's rising now. So the average beat now is getting closer to 8%, closer to 8%. Communications, interestingly, it's only been 3 companies, but there is a negative there. So I'm not reading anything into that. Lots and lots of earnings this week, 162 names. Notable: United Health, UPS, Visa, ADP, Caterpillar, Google, Meta, otherwise known as Facebook, Microsoft, Apple, and Amazon. And a total, as I mentioned, of 162 names this week. And plenty of economic data this week to go a lot. 5, 4, 3, 2, 1. Plenty of economic data this week to go along with 162 earnings reports just from the S&P 500. Starting with durable goods, expected a bump of 0.3%. Tuesday, we've got home prices from both FHFA and Case-Shiller, both essentially flat, actually a tick down for Case-Shiller. Consumer confidence from the Conference Board, looking at 93.8. Wednesday, pending home sales. The rate decision, we expect a 25 basis point rate cut. Weekly claims, we don't expect a report, but the consensus estimate is for 229,000. Third quarter GDP expected at 3, be revised down from 3.8. I'm not sure if that number is even accurate. We'll have to double check. Personal income and spending both expected up strong, 0.4%. Core or September PCE price index at 0.3. Employment cost index up 0.9. And the Chicago PMI coming in looking at about a 40 handle. So don't forget to subscribe, thumbs up, like, do all that good stuff. I am Herb Morgan. The name of this podcast is Slaying Bulls and Bears. I make the complex and complicated simple and sensical. This is available with the graphs and the videos on the YouTube. and it's available audio only pretty much everywhere else. Thanks, my friends. I'll be back to you again in 1 week.